So warm welcome. We will have a webinar with discussions, and then we will have a peer exchange on the topic of actually revisiting and guiding sustainability plans. And some of you might have joined an earlier webinar, which was run by the Global Financial Services Group at CGI, Climate Governance Initiative. If you did not, we have Fernanda, who will take us through some short revisits of that. My name is Lisa Engström. I'm the chair of Board's Impact Forum. I'm also a board member at the Climate Governance Initiative, and besides that, I'm a NED and chair on a number of companies, listed and private, as the rest of you. Today, we will have the summary from the previous financial services webinar on an aligned topic. Then we have some great chairs and NEDs that I will introduce very shortly. We will have a poll. We will do breakout room discussion so you guys can all discuss and share your insights and feedback or questions. And then we will have a joint discussion and some closing remarks. So you are generally muted at the first part here. You can use chat box. You can introduce yourself if you like to. And you can put your comments there or questions if you like to. The first part of this webinar is recorded, and if you have any technical issues, you can send a mail to our mail address, which our operations director, Fernanda, will be covering. And when we have some more people on, it will be 38% from Nordic and 62% from the rest of the world. So that's going to be interesting. It's obviously a very important topic, and I think that some of our geographies is probably a bit ahead of others, which would be interesting also to discuss. So Board's Impact Forum, we're part of the Climate Governance Initiative, which we do in collaboration with World Economic Forum. Just yesterday, we introduced 2 new board members at the Global Governing Board, which I'm also part of, and we elected a new chair, which is Julie Badley. So we are also collaborating with many of the board networks in the Nordic and also in SIAD's Corporate Governance Network. We are hosted by Next Agents, which Fernanda is the CEO of, and we're super grateful for that. So the first presenter, which will do the summary of this previous financial services webinar, is Fernanda, and she's the operations director of Board's Impact Forum. She is also a NED herself at the Innovation Leaders and at FAPS. So warm welcome. Over to you, Fernanda.
Good morning. Good morning. So my role here today is to share a bit of the insights from the webinar that happened just last week. So it had a couple of presentations from McKinsey with insights, and then there was a panel discussion with DBS, Barclays, and BP. And some of the insights was that, for example, looking into this slide here, overall, as they looked into this 672 organizations, we can see that many of the organizations are consistently reporting information when it comes to risk and opportunities, but financial planning and targets are the lowest, and targets, it seems quite surprising. In a way, it's not surprising that policy engagement, governance, and risk opportunities, which are the bottom 3 ones, are the highest, because many of them are part of early sustainability reports that were addressing policy and engagement as well as governance. But we're still not quite there yet when it comes to financial planning targets and strategies to achieve net zero. Please bear in mind that this is an international sample. It's not in the Nordics, which probably would look very different. If we can go to the other slide. Also, in here, they went through different types of industries and evaluated which ones had the strongest disclosure rates. And of course, it's clearly the ones where climate is highly material. So you see it in power generation as well as infrastructure. Quite surprising that hospitality is doing quite well there also. From a bit the surprising aspect from this information is apparel, for example. It's quite low, although it's a sector where there is fast movement towards considering sustainability and all sorts of aspects when it comes to materiality and also circularity issues of the materials, etc. Also very interesting that transportation services here is quite low, disclosing, considering how critical they are in that transition. Moving forward, yeah, thank you. They also mentioned in the presentation, which I think is quite an interesting insight, that this transition plan requires banks to develop a standardized framework to assess credibility. And it has 3 phases. So if it's appropriate, as in if it properly assesses the risk of the company, the risk that the company is exposed to. If it's sufficient, the actions need to be sufficient to achieve the net zero KPIs, sufficient to be compliant. And if it's feasible, the institution must be able to achieve the goals of the transition. And they seem to think that this was the most challenging aspect for financial institutions to assess if it's feasible or not. Moving forward, in this slide, they gave an example. So they had a part about quantitative data to be collected, and this aspect was about the qualitative data. And they thought that the quantitative was quite good already, but there was a lot of effort that needed to be put here on the qualitative assessment of the transition plans. And we see here that they also have this in kind of across 3 levels and across different levels or different theme areas, from governance, strategy, risk management, and metrics and targets. In the coming years, the environmental disclosure requirements will pose a significant challenge for banks in terms of reporting about governance, social. The presentation thought it was of low complexity, but they thought that it was of increasing complexity when it had to do with climate and environmental. In terms of the discussions, the aspects that were discussed later on in the panel, I thought that there was a very interesting point being brought up that was brought up actually by the presenter from BP. And he was saying that the transition itself is full of risks and opportunities. So a company should not focus on the destination, but rather on the pathway, the pace for reduction. So working on the ambition, the action, the progress, but really having that as the main focus. And I thought that was a very interesting point, focus on the process rather than just on the end result. A quite interesting discussion also in terms of investments, in terms of the technology to accelerate the pace of transition, but also until what extent there's a shift provoked by shocking supply, for example, with things like war in Ukraine, and kind of managing that together with reducing demand. So quite a few challenges in terms of investments in new technologies. And I think those were the most interesting insights that I wanted to share.
Thank you so much, Fernanda, and thanks for making that summary for us. That webinar will also be made available in our blog post when they have published it. Now I'm super delighted to introduce our very experienced chairs and NEDs. So Asthildur, Otharsdottir, both these people are part of our strategic advisory board, which we're extra grateful for. Asthildur has been a corporate exec for a long time and also a chair for listed boards. And she has recently transitioned over as partner to Frumtak Ventures. And she's the chair of a number of the startups there. She's also a board member of Iceland. Birger, he is a NED at Nordea, and he's the first chair of the sustainability committee at Nordea. His day life is probably more spent as a partner at Summa Equity, and he's also chair of Semiconductor, Nordic, and Pagero. And we're delighted to have you both. If I can ask maybe you to start, Asthildur, and share some of your perspectives on the topic.
Yeah, thanks, Liselotte, and good morning, everyone. Great to be with you today. And thanks for the introduction. Just again, to put things into perspective from where I'm coming from. As you mentioned, I made the transition a couple of years ago from kind of the corporate world and the listing environment into venture. And being a partner in a venture fund in Iceland, I chair several of our portfolio companies. So it's been a fascinating ride for the last couple of 2 years. I experienced that this environment, it's quite a different world. The private equity and venture capital industry has typically been a bit behind when it comes to kind of driving the sustainability agenda and when it comes to disclosures compared to like the big asset management firms and banks, although we are seeing some really interesting developments there. I'd like to mention a couple of areas where we're working on positive change in that area. First of all, when it comes to our investment process, while our funds are not specialized or specifically defined as ESG funds or sustainability funds, it is a key part of our investment thesis and the decision-making process. So we're early stage investors. Sometimes we're talking about something like, investing in a 10 people software company. So we're not requesting that they have, all their scope 3 in order, or that they have a sustainability plan in place. We're more kind of in the role of explaining what that is to them. So on this stage, we are primarily focusing on impact. Are they making a positive impact on the environment? Are they decreasing waste, increasing efficiency? That's a common topic for us. And we're definitely not just focusing on the E. Some of our portfolio companies have a very strong social agenda and impact, like DEI solutions, health tech, etc. And then, of course, we have the typical do no harm as an important part of our investment policy. For us, this is basic risk management. Are you going to invest in the problem or the solution? And we do go through quite an extensive ESG diligence process with all our investments, which also we use for educational purposes. So kind of, being an investor and looking at the sustainability part of the investments, it's largely for our stage of the world, it's largely focused on impact. Then what happens after we've made the investment? Then we typically assume board leadership and the chairmanship in our portfolio companies, and that's when we have a period of usually lasting several years, where the focus is on value creation, and that's when we can really push the sustainability agenda as an investor and through the board. And as I mentioned in the beginning, it's largely like an educational role, explaining the concepts and making sure that sustainability is ingrained in the strategy from the very beginning. And I think it was interesting what you mentioned before from the last webinar, talking about the journey and the importance of the journey versus versus the kind of the final targets. So that's also really how we look at that. At this stage, most companies, as you know, most of them do not have official disclosure requirements in the beginning, apart from those that we impose on them, and we take part in several disclosure initiatives. So we do gather data and request them to disclose data, so we can share that with our investors, which are large institutional investors here in Iceland. So we are mainly imposing that. Of course, this will change as the disclosure requirements will become applicable. All the new disclosure requirements will become applicable to SMEs. And it's going to be interesting to see how that develops for like the smaller companies and how they will tackle that. But at this stage, when we have startup companies and young companies, our main focus is on supporting them in building, healthy, sustainable businesses, integrating sustainability into all aspects of their strategy and the operations, and building a good reputation. So, and then as they scale and mature and take on, additional responsibilities when it comes to compliance and disclosure, of course, we're driving that and assisting with that. And actually, I'm really happy to share that one of our portfolio companies actually got their science-based targets validated a couple of days ago. We're really proud of that. So, being that's a company it's been in our portfolio for several years, but yeah, that's interesting to see, and it's interesting also to experience going through that process, in the kind of larger corporation listed environment, and then in an SME. And of course, the process is different and the requirements are different, which is good because this needs to make sense, of course, at all stages. And maybe lastly, continuing a bit on that front, on disclosure, I mean, we all know that we are experiencing huge changes on that front now, finally, and we will all have to figure out how everything will play out, data validated, etc. And while being a big advocate on being reporting requirements and compliance, and a strong believer that it's a great push for action, I believe it will take us some time to get the right balance on that front, and we really need to take care of not getting into the trap of putting all the effort in taking into the boxes, and really must seriously consider materiality. Where can we make a real impact? Not spending a lot of time and effort on something that doesn't move the needle at all. So yeah, that's kind of what I'd like to share in the beginning, and looking forward to this discussions ahead. Thanks.
Thank you so much, Asthildur. And for people maybe not knowing, you're based in Iceland, so you're very early in the morning for us. So thank you so much for joining us from that. Now, moving over to Birger, we are delighted to have you. What's your perspective? And you are on mute.
This is such a wide canvas, right? So it's very challenging to know where to drill in an early morning. So let me just sort of give a very broad overview of what I've been working on, and then we can sort of do the rest in Q&A. The first thing I wanted to do, though, is to put a little plug in for this event that we just did, we do every year in Seattle, called the Nordic Innovation Summit. Quite a few of Asthildur's colleagues, and I suspect some of the others' colleagues too, were appearing there. The title of today, or the subtitle of this year's conference, was Sustaining Sustainability Through Changing Times. And then it was precisely to the point that it's, the starting probably 4 or 5 years ago, putting a sustainability sticker on anything was just an upside. And everybody sort of thought that an innovation conference would be about that. But I think the last couple of years, the question has been posed more critically. We have a war in Ukraine. This is still important. We have supply chain issues. We have all of a sudden, we have cost of capital. So money costs money. The future, therefore, has to be discounted harder. Can we still afford this stuff? And then, of course, you have even legal challenges in the US. And that's part of the reason we wanted to hit this point hard in the US specifically, because you have these, Governor of Texas is suing BlackRock for incorporating ESG into investment objectives. They think it's inappropriate. They think that the business of a money manager is to make money. So there's all these challenges in a sense now to the concept of sustainability as core to business and as part of good leadership. And that's something we wanted to help counter by showing a bunch of companies, most of them Nordic, in fact, all of them Nordic, and their leaders that take the bet and show every day that sustainability is just good leadership. It's just the difference between the two disappears when you think about your business in the long run, and that's what we wanted to show. So please check out the conference. Secondly, I just want to say two words about Summa Equity, where I'm a partner, and that's sort of my day job, as Liselott described. We're B Corp, we're an Article 9 buyout and growth fund or fund manager, which means we filter on ESG in our deal sourcing. We are relatively collaborative in how we work with managements. We are hardcore on ESG requirements, of course, in how we manage our companies. But we tend to look for businesses that are collinear. So we grow top line by X, we grow one or more identified and quantified SDG aligned KPIs by more than X. That's sort of our philosophy. And so far that's gone pretty well. We have 26 investments, I think, by now, and sort of rough, we're top quartile fund and doing well. But and that's also the framework for some of my private boards, including Pagero, that Liselott referred to. But I thought I'd spend most of my time talking about perhaps Nordea today. I'm partially Nordic Semiconductor. And to this concept of revisiting sustainability plans, I think the way we've done it in Nordea, as Liselott mentioned, is we started very early, perhaps first in the Nordics, I'm not entirely sure, by establishing a very clear board accountability for sustainability back in 2018. And at the beginning, that was sort of an island of concern, and then we had a few employees who were also very enthusiastic. And then, so that was sort of the start of it. It did get us going, I would say. But then we had a change of CEO in 2019, and that's when things sort of started to take off, because Frank Wang Jensen, who came in to, in a sense, rebuild the trust and rebuild the operational excellence in the bank, certainly did that, but he also relatively quickly into his period as CEO, he accepted this notion that there wasn't one plan, there wasn't one 5-year plan that he communicated in the Capital Markets Day, and there was another plan called the Sustainability Plan. There was really just one plan, and where we hit both the E and the S and the G, and then something else in a sense where we try to look across and say, what is it about us as an institution at the core that aligns us to the overall good for the greater society and the world at large. And so we've also articulated that, being a financially strong financial institution, that's actually part of the sustainability strategy. You see it in Ukraine now that, in these places that have changed hands a few times along the conflict zone. As long as the banks work, as long as the ATMs give cash, these places actually function. And the moment that stops happening, they no longer do. So being a sustainable and trustworthy financial institution has a bigger role in itself, and that's part of our strategy very much. That means that it's integrated in all the work we do in the bank. In particular, as a bank, as you know, you get to make choices about customers you target, customers you engage with across debt, equity, project finance, of course, retail. And what we've done is also very clearly to say, and thinking about the McKinsey slides you just showed, that we choose to engage before we deselect. So deselection, throwing out customers who are not meeting their Paris Agreement targets, it will at some point happen, perhaps not in that facile a way, but there will definitely be an engagement process that goes before that. And that's very much what we've chosen to do, that we engage with all our customers, and we really integrate it into our KYC upfront, and then we integrate it into our work with companies that we finance along the way. But we have committed hard to 2030 targets and to 2050 targets. So we're reviewing this very regularly in the board. That's of course being on the E, and where we see that we're not meeting targets, which we, knock on wood, have not seen yet, we are ready to start deselecting. Another thing we've done, which I also noted on the McKinsey slides, and this is something we actually did first in Nordic Semiconductor, and then we're starting to phase it into Nordea now, is to pay on ESG targets. So management long-term incentive plans are aligned with our Paris commitments and Paris Agreement commitments. And the example of Nordic Semiconductor is interesting, because we started doing that 2 years ago, and it's really, even in a company that's perhaps less mature to start with, it really focuses the mind of everybody, and it focuses the mind on getting the right data, which is a challenge for everybody, I think, and it focuses the mind on making sure that the strategy is aligned, and it also, to the point about the number of institutions that are integrating the strategy and the financial plan, it kind of forces you to take a look across the incentive plan and say, well, is this of a piece? Does this work together? So you sort of get this forcing function that just says this is important, and this needs to be material, and this needs to be integrated, because otherwise you end up with an L-tip that points in different directions. When it comes to disclosure commitments, I think this is becoming its own science, and it's a far too wide topic to start digging into. But I'll say one thing, and that's the notion of thinking about both compulsory and regulatory commitments and voluntary commitments, and it's in a sense also just the type of commitments you make in communicating your strategy and every day through your, in Nordea's case, 30,000 employees. So I really try to manage it as a stack, so that you know which commitments you have made, which you have chosen not to make, which are perhaps coming up in a year or two. And I mean, CSRD would be a classic one that's phasing in over time, and you want to be able to track how it affects your own business and then your customer's business, right? But really think of this as a sort of a portfolio question, where you have a stack of upcoming things, that you have a stack of things you have assessed and chosen not to do, and a stack of things you've chosen to do, and that you need to manage through a life cycle almost. And that should cut across both voluntary and regulatory commitments. And that and also I think is something we learned at Nordea, hopefully helps ensure that you don't get too far over your skis, because that's obviously one danger here. I think we were probably a little bit there in the beginning before we put governance on this. And also therefore will help you in managing this particular risk that's called greenwashing risk, which I personally feel very strongly about, because I think, I want to be able to sit down over dinner and explain to my 14-year-old that what we said 3 years ago wasn't bullshit. In my world, when when young Swedish activists are saying blah 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 about COP26, that's in my mind, that's a failure to communicate on the part of us all, because that means we haven't managed to explain that we're actually sincere in what we're doing here, and we aim to do what we say we want to do. But the worst thing you can do there is to get exposed, a few years later for having greenwashed. And that means that greenwashing risk in our mind is something you have to think about, not just now, but you have to sort of think 5 years ahead and imagine the front page of Financial Times or whatever it might be that might pertain to pronouncements you're making today, and then see if they might still be robust, even as the world standards for what is good custodianship has moved. So I think I'll pause there. There's so much here, but I think it's better that we try to flesh it out through Q&A. Thank you so much,
and super thanks for giving these perspectives. And what's interesting is you both come with you've worked this through from the corporate perspective, both of you, and you're also evaluating it in the startup scene or the scale-up scene, both of you now. If you compare how you evaluate the sustainability and progress in the corporate side versus the venture side, what would you say that you're doing differently in the two areas? Do you want to start, Birger?
As long as you're sticking with venture, I think Asthildur is probably the right place to start. So I do.
Okay, go ahead, Asthildur.
Growth and buyout investments.
It's the contrast that I'm after. Yeah. What's the difference? Because you run a large corporate, a large global corporate as a chair, and you really transform that sustainability-wise, Marelle.
I mean, we can just look at something specific like materiality analysis, because I think that's a really important topic. And when you're in a large corporation and you have people and capacity to prioritize important projects like that, you can get you have funds to finance getting good advisors and getting some good input to discuss, for example, at board meetings, and then having a good in-depth challenge on what's being presented to you. When you're like in the smaller companies, you don't have as much, you don't have the capacity or the funds to address it in the same way. And then I think it's important to, with these issues, as many others, that you can actually go back to basics and get a lot of value of just putting the topic on the agenda at the board meeting, brainstorming for 15 minutes even, or to kind of get the different opinions on the table. So I think that some people in the early stages, they kind of avoid the topic because they don't feel that they have the capacity to address it. But I think that's beware not to do that, just to dig in and start working on it. So
thank you, Asthildur. Now, Birger. Now you can.
I guess one thing that you will see as you sort of move up the corporate stack is at the top end, regulation will hit fastest or soonest. So your degree of freedom in choosing your frameworks and choosing your metrics and choosing your targets is going to be a lot less, at least over time. Whereas at the early stage, it's not very, most companies are not very regulated, and you have a large degree of freedom. The way we chose to solve that at Summa was we sort of hitched ourselves to the Sustainable Development Goals. Now there's some issues with that, and we actually did the same thing at Nordic Semiconductor. We mapped our whole ESG plan against the SDGs. The benefit of that is that you're not sort of inventing your own framework for what's good for the world. Personally, I feel that's a challenge with a lot of the impact investing, a lot of the sort of charity investing that you see, particularly in the United States, is that you can get something approved as a tax deductible vehicle, and it might just be some pet project for yourself. That's the sort of the one extreme. The other extreme is you find some fairly globally aligned framework that you can hitch your plan to. And the SDGs we felt was the closest thing we had, at least at the time when we started at Summa 6-7 years ago. So you get this, you avoid the democracy problem that you invent your own targets and nobody else wanted to do what you want to do. The challenge for the SDGs, of course, is that they're actually articulated mostly for the developing world. If you double click on them, you'll see that there isn't much. For instance, we've invested in a care technology company in Summa. There's not much there that deals with, say, elderly care, disabled care, psychiatric care, those kinds of things in developed markets. So you need to be a little bit creative there too, but at least you start from something that has sort of broad acceptance, and you don't have to doubt whether you're actually aligned with something that's good. And then once you've done that, I think the important thing is you find something that's not only material, but that's to some extent measurable. So if you do start with the SDGs, on the sub-target level there, if you click down, you will find that there are some very specific and concrete ones. So for instance, we invested in an anti-money or a financial transparency company. And one of the impacts of their business is that we think it can reduce the cost of remittances. And that is actually a sub-goal, because I think it's SDG 10C, if I remember correctly, where there's a goal that says lower the global cost of remittances from 6% on the average to 3% on the average, so that people working in the developed world sending money back to their families in the global south don't pay 6% to some middle person. So that's an example of a very specific, concrete goal that you can set up as part of your plan, so that it actually gets measurable. And then you can start thinking about linking it back to pay and linking it back to things you can really measure over time. But by and large, the optionality you have in the early stage, it's important to manage that in a good way, so you don't end up sort of picking your own religion and or picking stuff that doesn't matter and or picking stuff that can't be measured.
Right. And looking at one of the things that at least I, who also work both with private equity and VC and large listed companies, I think many times the investment world was actually much better at, and that was to create value creation plans and make them really specific. And let's see if we can make whoever mute. One of the things I wanted to ask you is, how are you looking at value creation plans now? Are they both financial, and are they multi-targets to the different stakeholders? How do you communicate around your value creation plans? And have you brought any of that insight into your corporate customers or corporate companies that you work for? Do you want to start this time, Birger?
I need to parse that a little bit. I don't know, Asthildur, if you have an answer on the tip of your tongue.
Yeah, no, not really. But I think that, yeah, it's again, it's about the maturity for me. Comparing those two kind of worlds, it's about maturity, and the companies that are less mature, they don't address this in an as focused way. And as the more developed corporations, and I think they are definitely looking at their value creation plans, from the different angles, absolutely. So it's a more of a focused approach to do it like that. And I think that in general, people are a bit reluctant to disclose at this stage, because it's perhaps not very mature or developed at the moment. Yeah.
But you have both financial in your plans as well as non-financial targets in your value creation plan in stages.
Absolutely.
Yeah. And what about you, Birger?
Yeah, no, so I think let me take a specific example, and it's from this care technology business that I mentioned. We look for collinearity, right? We look for where the impact and the opportunity to generate revenue are aligned. And what we figured out there is that what you really want to do when you deliver software and technology in general to care institutions is you want to enable them to spend as much as possible of the time available, as in the human time available, with patients. So that became our metric. How many minutes can we free up from busy work or administrative work or non-patient work and deliver it into patient work? And then the good thing with that is that it's very much aligned with what you can charge for in the software as a service model.
Right.
It's really about, you know, how many people are using the software and how much are they using it. So all of a sudden when you, and then it becomes aligned with the care providers' economics, because at the end of the day, not necessarily every year, but at the end of sort of a period, then the amount of patient care, the number of minutes of patient care they can deliver is essentially what they get compensated for, whether it's in a private insurance scheme or it's a Bismarck scheme or whatever it is. So that'd be an example of how you look for collinearity and you actually manage to put that we deliver patient FaceTime. That becomes the North Star for the company and the business model and the sustainability or the impact plan.
Thank you so much. So we will come.
May I squeeze in here one more question that came from the chat?
Yeah, sure.
From Anna Mosberg. I can read it, but maybe Anna, do you want to bring it up? Maybe that's just easier.
Yeah, maybe it is. Let's hope it is. I just wondered if you can share how you changed your goals, because according to me, you set some goals, but in some of my companies, you have to revisit those goals over time. It could be based on your own like lack of data or surplus of data that you suddenly realize something new, or that the regulations change, or that it's being defined in another way, the way you're supposed to measure, or it could just be that you come to better things, or that you have to prioritize between two sustainability goals, things like that. You have changed your goals. I'm sure you have, if you have worked for a long time with goal setting, but in this area. But I would love to hear if you could share like how you view that and how it's done in the boards.
Yeah, so part of it, great to see you, by the way, Anna.
Hi.
Part of it, I think, is about this portfolio approach to commitments. So that's sort of at the framework level. And that is an important discussion to have, I think, at least annually in the board. And then another part of it is, I think you alluded to, many of these goals will be operating on data, which is initially probably estimates and then becomes proxies, and then it becomes hard data, and then it becomes hard data that you get more and more confidence in. And then I guess hopefully that's going to be a relatively smooth path, but I suspect, and we already see some examples, that it's not. So you discover things that you weren't entirely prepared for when you were operating on proxy data. And then the third thing is, I think I don't think we've disclosed this. I won't mention the specifics, but you know, especially when you have this extra lens of linking to pay, and then you end up getting a different path than what you originally thought about. You obviously have to look really hard at that. But then the beauty of that is then when you link things to pay and you miss something, you both have a self-correction mechanism that somewhat drives itself internally. And the other good thing is that sort of relative to the blah, blah, blah problem, the sort of the Greta Thunberg challenge, at least you can say, look, we set a high target, we committed to it, we actually put some paycheck against it, we missed it, and therefore we are actually not spending, we're not getting a whole paycheck. So you see the accountability in practice, and I think that's going to be very important for this stuff. That it's not only oops, we missed, but you know, oops, we missed, and it actually had some consequence.
Right.
Yeah, and I second this, and I've actually had you know, experience where you're really making good progress, but because you're getting much better data, then actually your kind of results are worse than what you disclosed last year, and I'm sure people have experienced that, and then it's in my mind it's all about transparency and honesty and explaining what you're doing and why this is the situation, and basically it's something I think we're all dealing with in this world of disclosures.
And I could just add from my own perspective, one of the challenges, especially if you work in companies which are kind of global growth companies and you keep doing M&A, you didn't really think about that they would be coming in with much lower things. So you really get a hack, and you really need to start to think differently about your long term in order to actually cope for those changes, which I do agree with Anna. It's the changes in those goals that can become a real challenge. So one of the things I now wanted to do is to actually launch this poll. So we get your perspective before we go into the breakout rooms. What we're looking at is, do we focus most of our board's involvement ensuring that ESG is included in the business strategy? Or do we focus most of our board's involvement to ensure that we actually do an appropriate assessment and ensure that sustainability is appropriately disclosed? And finally, when we share the status of our progress with our investors, and in fact also our lenders, we didn't talk too much about that yet, are we clear about how they evaluate us? So if you can answer this, we will get a joint perspective that we can share. And we can see where we all are. So about half of you have answered fully, so we wait for a couple of seconds more on this topic. And then we will also do some breakout room discussions, and we will come back and have, you can also think about questions you will have for Birger or Asthildur, or in fact, anybody, Anna as well, in this topic areas and how you look at things. Okay, I think most of you have answered, so I will end the poll. And here's the results. Can you see the results? So the first one, we focus most of our board's involvement in the ESG area in business strategy. We have quite high numbers there, and we have even higher numbers on the assessment and measurement area, which might be also symptomatic of where we are. And we have a lot of European participants as well in the audience. Before we go to the understanding, do you want to comment anything, Birger and Asthildur? Anything that surprised you in these results? No.
No.
No. So let's look at the last one then. Do you actually know how you're being evaluated? I think there we can see some interesting results, and I think there's a bit of work to do also for banks to let all of the not banks but investors to be more clear also to companies, what is it that you're being evaluated on, which I think is an interesting perspective we can all reflect on. But we also as boards needs to be active and take that on. So now we are going into
I think just if I can
yeah, go ahead.
That,
Absolutely, go ahead.
That is a particularly challenging area now, right? Because you're going to be, especially if you have shareholders from some of these more litigious jurisdictions like the United States, you might actually be challenged legally on both sides of the issue.
Yeah.
You might be challenged for overemphasizing, and you might be challenged for underemphasizing. So it's not entirely clear across a wide base of shareholders. You can't expect, in fact, clarity. You will have different types of shareholders with different objectives, most likely, especially if you have a company that sort of needs to be part of a diversified portfolio by virtue of its size.
I think you're absolutely right, and I think it's also very interesting in terms of how you how the entire area has become so politicized, especially in US and somewhat in UK. I understood from my colleagues that there's a huge debate in UK of companies that want to delist due to them being so aggressive in the regulation, which is an interesting debate, we have to say. So now we're going to do a bit of breakout room discussions, and you're about 5 or 6 people in each room. You try to appoint a chair and a vice chair. We will come back, so we will continue to discuss jointly, but just for everybody to have a chance. So a quick introduction, anything that surprised you with the poll, but then also look at what are the key challenges in actually figuring out the progress and disclosing the progress. And try to identify at least one good board practice that you think seems effective or you could consider testing, and any questions you would have for the presenters. So I will send you out to rooms and I will also bring you back. Any questions before we open the rooms? It's about 10 to 15 minutes. Welcome back. Let's see how many we lost on the way. Well, we'll keep it open and hope that people will rejoin. Thank you so much for the engagement. I wanted to start with actually listening to, I think, our biggest room, Anna, Birger, Cecilia, Christopher, and Fernanda. So what is your key takeaways?
So, Fernanda, do you want to give your reflection on what we discussed?
I think that you should do it, Cecilia. If
okay, yes.
You're our chair, kind of managing the discussion. That would be.
Well, I could actually share some insights as to what.
Yeah, excellent, Christopher.
So
yes.
basically, a lot of discussion around the whole question of data quality, reliability, and accuracy. So there was quite a bit of the need to manage data and managing for the data, of course. There was a lot of talk about alignment and the need for alignment across your management system and your governance system. So of course it requires, because you're navigating a lot of complexity, so there's now a greater need for integration. Integration of your management systems, integration of your governance, and of course the need for partnerships. So the context is continually changing. So there's a need to continually monitor the context, both internal and external to the organization.
Right.
And ensuring that there's adequate communication, not only around your goals, but you know, just communication around these requirements, because of course there was quite a bit of need to avoid the greenwashing because of the implications of that also. So there's also a lot of mention of risk and navigating the risk universe. So of course the 3 lines of defense came in, and one thing that didn't come up though was the whole question of opportunity management. So we do a lot of risk-based thinking, but we need to also do some opportunity-based thinking. What are some of the opportunities to actually advance action around these metrics? Assurance was a big issue. How do we verify and validate some of the, not only the claims, but the progress on the goals to stimulate the improvement action? But again, this was another area where learning, understanding that you're on a learning journey came up, and the need for leadership, of course, around these issues and governance around these issues. So those are some of the key kind of points that were raised in the room.
Thank you so much. Unfortunately, I think it's the era of consultants. I have never seen so many consultants offering so much work with so little backup of knowledge. So it's a huge, and I think the boards really need to grab it back and actually realize we need to set the tone. Let's listen to Isabel, Sean, Mette. Jan.
Okay. Yeah, I just needed to activate. Yeah. So what we had first was, I mean, yeah, no, it should be taken seriously within the board, but sometimes it's difficult that the board actually take this subject serious, depending on the ownership. So that might be the first hurdle. The next is to actually decide on what. I think our conclusion was kind of that you know, you need to know which framework to use, but you also need to make sure that it's actually creating value for your company. I like that was kind of said as a conclusion, is that it's more important that what you choose as KPI is there for making value for the shareholders and not just following some standard requirements, which is perhaps not even adapted to your business model or your company purpose. I personally think that's where, as a board, you need to drive that very much indeed, and make sure that you're following what's good for the company. Because in the end, I think also you know, you might get into the greenwashing. Yeah, and then there is a discussion of time frame. You don't do this overnight. This will take time, and it's more important to look at what the end result is than an immediate result, which might not be the right one that you need.
Right.
If anybody has something to add, or
no. Okay, you can comment in a while. So, Asthildur, Jane, Per, what was your reflections?
Yeah, it's a bit embarrassing, but we have people in the car, etc. So I need to speak some more here. Sorry, but we discussed a bit on the difference how boards view, you know, whether it's a burden or an opportunity, and that it makes a big difference, you know, whether ESG is actually ingrained in the strategy or not. Mm-hmm. And whether people are seeing the opportunities, the commercial opportunities, etc. We discussed, as some of the other groups, the challenges relating to data quality, comparability, etc., and that we're actually using, you know, averages and standard measures, which, of course, at the end of the day, don't make much sense. We discussed the kind of challenges with internal capabilities. You know, how much capabilities do the organizations have, and how much interest do, for example, the finance function have in really putting their weight into this. We discussed, you know, daring to choose, making sure that we actually dare to say, okay, these are the areas we're gonna focus on, and we're gonna prioritize like this. And we discussed that when it comes to the smaller companies, we discussed the trickle down effect, which I think is quite interesting. That actually, you know, when the larger corporations are making their commitments and setting their targets, that it has a trickle down effect to their smaller suppliers that then have to provide information and disclosure to be, you know, to actually be selected.
Thank you so much. I had to say, I have actually used exactly that to get drive in one of my companies. And I asked for an evaluation on how many of our largest customers have committed to science-based targets, and what did they commit to? And then it was actually a very good discussion that I could follow on with to say, well, if they have committed and we're not doing anything, will we be their suppliers tomorrow?
Exactly.
Which was actually a super good way to get the commitment to start to look into the area. And it's interesting, Birger, I want to follow up one thing from you, because you kind of started this work at Nordea, and I guess you had a lot of resistance in there. And a lot of confusion. So how did it start, and how did you make it successful actually?
Well, I think it was, as often is the case, it was a bit of a layer cake or sandwich, whatever you want to call it. We had a couple of enthusiasts in the operating organization who had been, I think, perhaps running a little bit out front, but stirring up some attention. We had a guy called Sasha Beslik, who was sort of our spokesperson. And then we had some more systematic work that was been driven out of asset management by Snorre Storseth and his team. And they've been at this and they've collaborated, I think, with Synteo and those guys to put a little bit more flywheel and momentum into it. And then so when we've tried at the board for a while to get a sort of agenda, make it an agenda item, and we had a board chair at the time. His name was Nana Walrus, who's a very sort of a classical sort of Friedman type. But there was an opportunity to get this committee established. Won't go into the details, but then that sort of enabled us to pull the threads together. And then the final layer in the layer cake was when we had the CEO change and reset our strategic plan, and we agreed that that this was one plan and not two, and that then sort of that brought all the threads together. So many people working at different levels and sort of finding each other across an organizational layer cake that finally came together in a really good way, and starting in 2020, I would say.
Which is interesting, because at the time when you started, it wasn't really regulated for your business either.
No, that was, if you want, a voluntary commitment.
Yeah.
But I think that this is sort of my model on change for organizations quite in general. Unless you have at least two levels in the organization that are sort of driving something and then squeezing in the middle, it's very hard to get things to happen. And of course, in this case, we ended up with multiple layers. But and then when it all aligned, it started really taking speed.
Right. And Anna, I don't know if you can hear us. Are you still there?
Yes, I'm here.
Yeah. Hi. So I know you have also been very instrumental in actually driving getting sustainability, and actually, in fact, getting sustainability and tech digital started in several companies. Can you talk anything about how you make that happen? And my specific question is actually when you're not the chair. Because if you're the chair, you have much more power. But how do you make that happen in your companies?
No, but I'm not the chair in any of my companies, so I'm just a board member. But I think that's not you can still influence the board even though you're not a chair. And I think it's raising the discussion. And then I think when you come from the tech area, it's also about educating the rest of the board, because the knowledge is often, let's say, not there. Or they don't realize what is possible to do and what is the restraints and what does it encompass. I think tech as an enabler for ESG is fantastic. I mean, truly fantastic. Talk about opportunity. Yeah, it's super, super great. And then, but then obviously you have to see where in the maturity curve is this company, and how fast can you push it? Because as we already said, data is really important. So I think making a data strategy and making sure that you have the base for being able to measure and automated measurements, not so much manual, it's really good. But I think everything starts with the vision. Where are you going, and what is your goal setting? That is, of course, the rest is the means to the goal. Yeah. But for a board, I think it's both. It's important to have both. Just push like the strategy and make sure it's a part of the business. Set the flag out far enough so you really challenge the organization, because that's how you create new thinking. And then, of course, being able to support with what is actually possible to do.
So thank you so much for sharing that. I wanted to go and actually ask Asthildur and Birger, with your broad background and actually having been the champions at your companies, what is the recommendation that you have to our other board members? How should they go about to do this?
Should I start?
Yeah, go ahead.
Okay, just, you know, based on this discussion and in general, I think that the recommendation for boards would be to, you know, don't get lost in all the compliance, try to see through the burden part, look at the opportunities, and make sure to look at this as, yes, as a strategic opportunity. I like what we were discussing in the breakout room, daring to choose. I like that. I like that kind of sentence, choosing what to focus on. And then I also think a really interesting part is kind of the whole connectivity of it all and trickle down effect. So for the smaller companies, you know, they can't and the boards of the smaller companies, they can't, they're not in isolation. So they basically, I mean, their customers' commitments in some way become their commitments. So really important to make sure that you're able to fulfill that and that you have the capabilities to fulfill that.
Thank you. Birger.
Yeah, no, I very much support the notion of not getting lost in what is compulsory. But I think the way to do that, unfortunately for now, is you have to invest enough. You have to invest in the consultants that you mentioned, and you have to have systems, and you have to have people at the right level in the organization who are accountable for this. And so you're going to have to do your homework on that so that you can focus in on where you have optionality and where you can go the extra mile and perhaps try to see around the corner of what might be coming next. So you can be as well prepared as we heard, for instance, Swisscom has been. And you know, it might feel like you get punished in the short run because you've been good in the past, but we all know that in the end, that thing is that's sort of how you lead and how you succeed in this game.
Thank you so much. I'm going to close up. I was just saying, Jane, do you want to comment anything from actually overseeing this across Europe at least and more? What do you see?
I see, especially right now, that companies are worried.
Yeah,
is probably the right word. But actually, last week I was also talking to U.S. companies, because they will also be hit by the by the EU legislation. At least those which have large subsidiaries in EU, but also, and this is important, also those companies who have a headquarters in EU, for instance, in Ireland for tax reasons, but they are listed in US. Right. There are many of these. And if that is the case, then you will be hit in the second wave. That means in reporting year 25.
Right.
And they have so far been under the radar, and that is not going to happen in the future. So we will see a lot of American companies who will also have to report on this, regardless that they are not necessarily part of EU in their own minds, but they are.
So I think it's going to be super interesting. And as Anna said, also, you can use a lot of tech actually to enable this. But there's also coming all of these tech regulations now with AI and the cyber one and the extended data privacy ones. And now we're kind of, we're getting into a tsunami of regulations. And
perhaps it is also too much. Perhaps we will see in a few years, it will push back.
But I think, as you said before, Jane, the most important thing is actually that the board tries to understand and makes their own decisions and not getting pushed either way. Thank you so much for sharing. And thank you, a special warm thank you to Asthildur, to Birger, and to Fernanda for helping us looking into the previous one and summarizing that for us. Also, of course, thanks to the audience and the operations committee, and warm thanks to our supporting board networks, which we actually have Cecilia here from Styrelsekraft as one example. What's happening next? We will rerun the online sustainability program, but we will complement that this time again with 3 peer exchanges which we think are going to be very interesting. We're going to make them a bit more dilemma focused this time. And so we're going to deep dive into the typical dilemmas that we are sitting in. And see what we can do to discuss and work out and give each other hints and tips on that. September 7, we have a next board and ESG pulse that we're running together with INSEAD, Hydrogen Struggles, and BCG. And we will continue actually a bit of focus on dilemmas. We've started to do that, and we think it's actually quite powerful because we're going a bit more into what is the challenge that we're trying to overcome. And then we are going to run some master classes on board creativity, innovation, and sustainability, because we think we need to move towards the opportunity side quite a lot. If you haven't signed up for the Rethinking Global Strategies and Disruption, we're doing that with INSEAD as partner, and they're running that in Paris. It's an academic and practitioner conference. And I'm going there, and there's actually a private equity company a conference just before that. So if you're going there, so I hope to see you there. And if you want an invite, the target is primarily large company NEDs. So if you're part of that, do let us know. In August to November, we are working with Inboard now, the INSEAD Inboard Nordic Academy. And I know, Birger, you are usually one of the presenters and trainers on that one. We will also run one of the modules. It's 4 modules. You can do 3 + 1. And one of the modules is going to be held in Stockholm. And we're going to run that together with McKinsey. So that is an opportunity you can also look into. Now, we are doing webinars together with CGI. And the next one is on May 25th, which is actually on the topic that Birger mentioned on incentives. So one of the things I think is to both figure out what the incentives are, how you look at that, but also looking at the broader perspective of how do you motivate. And then there's another one on the Financial Sector Hub, which is on greenwashing on the 29th of June, both worthwhile. Do check out our website. Do invite your board colleagues to join us. That would be fantastic if you can help us with that. And we will continue to work and collaborate with all of you. Thank you so much for today. And warm welcome to the next webinars and events. And do let us know what we can improve. And we will continue to work to try to make an impact. Thank you so much, everybody. Thank you. Bye.
Bye.